today is January 24, 2022, and I'm going to be analyzing the Australian stock market, whether this is a correction or a crash, and whatever it is, how are you going to protect our position, what to do. This is the most important thing. So not just have the information, but act quickly. Let's have a look. Just want to remind, this is not a financial advice, just as from BT Trading, sharing with you how we apply our strategies to know when to buy and when to sell stocks, how we set up targets, stop losses, and much more, all in this video for you. So if you like, please subscribe to the channel and share this video with someone that you believe could be helping. Also like to invite you to become a member of our free Facebook community, which I will be putting the link for this very same analysis for you, so you can have a look at your own time. So let's jump straight in what's happening. First of all, let's identify whether this is at the moment, whether this is a correction or is a crash. Now, what I did, I put together three corrections before pre-COVID, before the crash, and also 7 corrections after the crash. And we're going to identify whether the current downturn, which we are at the moment 6.9%, it is anything out of normal. And that's when the red flags start popping up. Now, let's see what's happening. So in April 2020, we had 8.23% correction. June 2020, we had 7.94% correction. Then September 2020, 6.64% correction. So those three initial corrections that were generated or higher because the market has a lot of volatility going on due to the COVID crash. And then that's absolutely normal, have a large corrections like this. But then once the market starts stabilized in 2021, we saw a much smaller corrections until end of the year, which we start looking at 5% plus corrections, as you can see here, the market going down. Now, the thing here is, if you look into a volatility index chart, you will see that the volatility itself start to increase, start picking up. When the volatility increases, the swings in the market, it goes higher and higher, and potentially we end up having a change of pattern, which in this case suggests that the market now has the last 6 months, which suggests the market has been trading sideways here, but then we could see a reversal. We could start to see a downtrend. We could, not saying that we're going to. The truth is, nobody really knows what's going to happen. We can only use our strategy. That's why we're here, to use our strategy. So as you can see here, there's a break. It could be a breakout if the market doesn't recover between today and tomorrow. And then that's a big red flag out there for bearish position. Now, one of the things it's important to know is that we have a bearish intersection here. Every time we have a bearish intersection, it's just completely on Friday. Every time we have a bearish intersection means that we need to protect our positions from a potential crash. As you can see here, we had a bearish intersection right there again, and was the last red flag that we have before the COVID crash. And then if you use the bearish intersection to protect your position, then you would be protected for all this fall here. So we can do exactly the same. The only problem is, if the market is moving sideways, you need to buy it again. And the bearish intersection become redundant, but it's still a great strategy to look at. Is even if you have to buy, to sell at the bearish intersection, we had the bearish intersection there, and then we had to buy it again, in a bullish intersection, as you can see here, right? A bullish intersection, and then again a bearish intersection, and then a bullish intersection once again, like three bearish intersections here. That's what happened when the stock or the market is trading sideways, and then the strategy of cross intersections become redundant. So you just spend, despite you're still protected by the crash, but you end up spending a little bit more in terms of buying, entry, and exit fees, because you buy and sell, make no profit, but you're still, again, protected. Now, once you identify this pattern, and then obviously, which is the case, the best area to buy in the market, let's say if you're looking to invest in equities, is buying at the bottom of this range, which is exactly where we are sitting here, right? We're exactly sitting here. Now, what we wanted to see before buying like a crazy is we want to see a reversal confirmation, at least a big green candle somehow along the way between today and tomorrow, and maybe even on Wednesday. Wednesday is actually public holiday here in Australia. Now, this is the thing, guys. This is what I believe. Also, look into U.S. market. U.S. market U.S. market suggests that still trading, the correction is still following a pattern, and then still sort of in a pattern. Obviously, we have a higher volume here, but it's still in a pattern. So look, it doesn't concerns me too much, unless really we see a massive red day in the US tomorrow, and that's when things start getting ugly, and then obviously you need to make sure you have a countermeasure in place, right? Another interesting fact that suggests this is a correction and not a crash is the volatility index. I always look into volatility index and see what's happening with this index. So as you can see here, we have a increase of the volatility index, but you see here a cover crash. What happened with the index? It went all the way up to 80, went nuts, went massive. Like, we can trade that if you want. Now, what happened is last couple of times, last correction was about 5.7%, similar to what it is now. We had a higher spike on the volatility index. However, the whole thing came down again. So now we're having this spike again. And look, it suggests that we might have a reversal here, and that's interesting, that's positive, and it shows that we look into, again, just a correction. We still need to follow day by day, right? Now, what to do now that we know that we have defined that so far is only a correction? What to do? We just, again, like with the bearish intersection, you can either reduce position if you need to protect capital, guys. If you need to protect, if you cannot afford a downturn, upon a bearish intersection, you just maybe sell half of the stocks that you have to protect position, and then wait to see what's happening. Wait to see what's happening. Although, again, we are now trading into a range, so I would wait to see whether the market recovers or not. If it recovers, that's fine. Then you just hold the positions. That's what we're doing at the moment. We're holding the positions. And now what I suggest doing now is, once we see the market going up again, let's say around these sort of levels, then we might even open a short trade position, PBRs or bear, and start protecting, start building countermeasure in case this trend changes. Which we saw a change of the trend in June last year, and we could see another one if the market doesn't reach the a new all-time high again. We might see a sort of correction towards the downside. Not correction, sorry. We see a change of the trend now. Could be the ceiling, and then we start seeing the whole market declining. That could happen as well. I mean, to be honest, nobody knows. We just use the following strategy. And then if you have the countermeasure, we just hold in positions and build up as the market tops to higher highs, to higher lows and lower lows as well. At the moment, we don't have a higher lows or higher highs. At the moment, what we have here is the market trading within this range, which is still sort of consolidating on the top here. Potentially, we could see another breakout to the top or to the downside. Time will tell. Guys, this is my thoughts. This is what I would do if I needed to protect capital. Just every time we have a bearish into sector, just sell it and then buy back at the bottom of this range here and watch for a reversal. Only buy in when we see a reversal. Let's take a look at examples of reversal. Here, this is a big reversal indicator. See this tail on a candle? This is just a candle. You can see those tails, meaning reversal. This is another reversal indicator here, guys. A green candle with a massive tail. So we're not seeing that yet. This is 12 o'clock on Monday 24th. We haven't seen that yet. We might see in the next few days during this week. At the moment, it's suggesting that the market still could go down further. But if we see something like this, potentially tomorrow, a massive green candle, that is suggesting that could be a reversal and everything's fine. So no worry about it. So we wait and we see what's happening. In the meantime, for example, we are at the moment, we're still positive, 11% positive on our portfolio. So we're not worried too much. Up to you really what we want to do. But I'm not worrying too much. I just don't want to lose money in this last hypothetical correction, but I want to be potentially buying positions that we are good quality stocks that we believe there's good, great prospect, growth earnings as well, and we want to be buying more and making some short-term trades out of that as well. So this is my position on the market. At the moment, we need to watch. We don't know whether it's a correction or a crash at the moment. It's still in line with the average. So at the moment, it's just a correction, but could become a crash. So we'll see what's happening in the next few days, and I'll be updating you on this. Leave your comments below if you like the analysis, if you think it's a correction or a crash, and why do you think that? Leave your comments below. I will see you in the next video. The whole idea when we designed BG Trading BGS 20 strategy was to use only a set number of indicators to make it simple and clear to understand and to be able to apply our KPIs very easily and very effectively. So you don't have to be any Wall Street smart person to be able to apply those strategies. We really hope this course will help you to make better decisions and make successful trades. See you in the course.